Our top story this morning, more troubles in the housing market here. New home sales in May plunging 11% from the prior month to 619,000. Analysts on Wall Street expected 633,000, so that's a big miss there. The drop in sales activity also leading to an uptick in available inventory, which means more homes are sitting on the market. All of this largely an impact of high mortgage rates, which continue to weigh on home buyers. Here with more reaction, we've got KPMG economist Yelena Maleyev. Yelena, great to have you here. I want to just get your broad read here on what we're seeing in the housing market, considering some of the moves that we're now tracking both week over week on the mortgage rate side and then month over month on the sales side as well.
Definitely. Thank you. The housing market is definitely in a fragile state right now. This higher for longer interest rate environment is weighing on potential buyers. Those who own a home and are thinking of selling, they're locked in with a significantly lower mortgage rate than is available currently in the market. And then, of course, builders are facing a lot of hurdles with, still tight labor market for the construction industry, the need for land, materials. And then, of course, they're also facing financing costs that are going up due to the higher interest rate environment. Around the end of last year, the market was expecting for interest rates to be lower by now. And of course, that hasn't happened yet. So this kind of longer time frame of high interest rates is really starting to take a toll on the housing market.
When do you expect the housing affordability squeeze to perhaps abate a little bit?
It's a great question because we were expecting interest rates to be lower by the second half of this year. Now we've pushed that forecast out into December. So we do expect one rate cut in December, which will help bring overall mortgage rates to perhaps around 6.5 by the end of the year. That's probably not what people who are waiting for those 3% mortgage rates are wanting to hear, but unfortunately those days are behind us, barring any sort of crisis or anything that would require rates to go back down that low. By the end of next year, we could have a few more rate cuts in the pipeline, maybe bringing mortgage rates to 5.5. But the other side of the affordability puzzle is the housing costs, right? So the home values have still been rising very significantly because of that demographic tailwind from millennials aging into their prime home buying years, baby boomers wanting to age in place, and this significant lack of inventory, both in the newly built and resale market, meeting these demographic demands that is going to keep a floor under home prices for quite some time. But the mortgage question, we should have some reprieve into next year.
Certainly. And so one of the huge things that we're considering within the existing homes and new homes kind of combination to really round out the entire housing picture, not the entire housing picture, but at least a large line share of it, is really where on the new home sales side, we've continued to see new home build outs actually account for more percentage than some of the historical averages. What is your anticipation for how that will continue to moderate as we move on throughout this mortgage rate environment?
Definitely. And this period of higher interest rates, especially when we first started to see them pick up quickly in 2022, should traditionally have made builders pull back on building. But instead, due to the demographic tailwinds, they've ramped up building, of course, with significant hurdles. They can't ramp up that quickly to meet demand, but they've been really benefiting from the tight supply in the resale market by being able to build homes, offer mortgage rate buy down. So instead of the 7% in the market, they might offer something like 6 or even 5.5. And they've also scaled down. They've been able to change their buildings so that they're building smaller homes, something more fit for a first-time home buyer. Now, that's not the case across the entire country, but definitely in some pockets of the country where it's easier to build. And then, of course, continued tightness in the resale market is just going to help keep that balance of more newly built homes on the market to be on that higher end rather than traditional timeframes. But of course, as mortgage rates come down, more sellers will start to re-enter the market. We have seen a pickup in inventory. It's still quite low in the resale market, but it is picking up. So if mortgage rates come down, people feel less constricted by that lock-in effect. We will have more of that balance where newly built homes could be more of that share of the market, let's say 20% rather than the 35 or so we've seen lately.